All right, here's the great advantage of knowing what each individual signal tells you. Yesterday we had that shooting, or on Friday we had the shooting star getting up toward the overbought area. But more importantly, look where it occurred. We basically draw a line right down through the tops, and that's where it was showing that there was going to be weakness. Now, stochastics aren't quite in the oversold condition. I'm sorry, in the overbought condition. So what does that imply? That implies they took it down, they brought it up. They took it down, brought it up, smashed it, brought it back up to where it was, and now taking it back down, but they're not quite in the oversold area. So this would be more of a estimate, I say, that they're going to come back, test the 50. If they can't get through it, they're going to do a J-hook and this time go through that resistance level. And the only reason we kind of suspect that is because the stochastics aren't up here in the overbought condition. And along with that, if you analyze what the NASDAQ did today, it did come back down to the T-line, came back up and closed right about the 50. But I would suspect if the Dow and the S&P 500 head back down and kind of test the 50-day moving average, that this is going to kind of waffle in here for a day or so. And then this one has to break this downtrending. Whoops. And it has to break this downtrending channel, coming back and doing a J-hook. So this is where, again, we got the advantage of knowing what should happen based upon how things open the next day. If this opens lower tomorrow, or they opens starts trading down, pretty much tells us they've failed in here. We're back into some sort of sideways mode. Yeah, it's not a great chart on these indexes right now. However, at least we have the advantage of being able to analyze what it should do based upon the support and resistance levels. Failed at the resistance. Now we can see whether it's going to act as support. If it does, it means we probably still have some juice left to the upside as far as the stochastics are concerned. So some of the other influencing factors, we can see what's happening with crude oil. Kind of in a sideways wedge. But what does that essentially tell us? Why not retest of the 200? We don't know that yet. Yeah. Well, first of all, we're still heading in an uptrend as far as our stochastics, and we haven't even breached the 50. So that becomes the next analysis. That if they fail here at the 50, where's the next target? Gap and possibly the 200. So that's why it will be important to see what they do over the next couple of days, whether they can support on the 50. So we're not trying to make projections of where it is going. We're trying to analyze where it could possibly go, and once it gets to the first support or resistance level, what does it do at that level? So anyways, crude is slightly up. Yeah, it's up a wee little bit, but it's kind of implying that maybe they're not going to go below that resistance level or that support level. And you can see what's happening with gold right now. Gold, ever since it came out of this J-hook pattern, is still moving up steadily, which means things like Nugget Also, when it broke out through this level, you can see, let's make this smaller. You can see pretty much there is a resistance right in here. When they gap up through that, that pretty much gives you the information you want to know. They don't care about that resistance anymore. They're in the next wave. So along with that, you've got AU that's still moving up. We're watching SA for it to get up here to the breakout area because once something goes into a big fry pan bottom pattern such as that the next move could be at least like this and or this magnitude. And AUY doing a nice steady uptrend. So there's lots of gold stocks out there that are just nice steady uptrends. Here's GG, also about to the point of a major breakout. Okay, so let's see, the dollar, what makes it very simple to analyze what's happening. Notice what's happened here on the dollar on the this is the September chart. But notice it failed right here at the 200. There was our bearish Harami telling us to buy and stop. Then look what it did when it got back to the T-line, telling us we're kind of in a bobble. So now you watch, you can be trading the dollar positive on the basis that it's probably going to come back up here and test the 200. And if it goes through, now you've got the bobble J-hook pattern in progress. So these are, a lot of people say, can you trade Forex? Yes, you can trade Forex just as easy as anything else, but you probably get a much better feel for trading just the individual individual currencies by themselves. Well, what's happening here? Like the euro, that looks like a good bearish J-hook pattern in progress, failing right here at the 200. So once again, the reason I like to trade anything based upon the charts is because it pretty much tells you where the support's happening and where the resistance is happening. I was also trading live cattle. And today, same scenario. We had shorted live cattle more by just a quick trade because once it started fading after failing at the 50, where was the next logical target? Coming back here to the T-line. Well, today it opened and traded lower, got down into this area, which was a good hefty profit. And so this is why I usually trade off the 10-minute chart, because once it hit here, notice what happened. Bullish Harami came up and failed. Hold back. Then we had another bullish signal back up above the T-line. So we covered our short positions here with good profits. Didn't go long only because this chart is not really saying it's time to go long. Now it's kind of telling us we had a bullish Harami hammer signal today. If it opens positive tomorrow, where do you think the next likely target's going to be? Right back up to the 50, which becomes our bobble pattern. So again, using the charts, whether you're using the 1 minute, 5 minute, 10 minute, or the daily, I usually use the daily to tell me what to do on an intraday basis. And lean hogs, did a long-legged doji, and where did it do it? Right smack dab here on the 50 with stochastics in the oversold area. Watching this one to see if it gets back up through the T-line. Tells us time to start buying. Okay. Taking a look at some of the ones that we own. CYTK, this is pointing out this one because this is a nice steady uptrend even on a sloppy day like today. And what was the instigator of this uptrend? This big belt hold bullish engulfing signal that told us they aren't able to close this below the T line, stay long. So the reason I'm pointing this out is anytime you see that belt hold signal, especially when you're in an uptrend, just improves the probabilities that they've taken out a lot of sellers and there isn't too much in front of them. Whoops, as far as selling is concerned, which makes the uptrend pretty strong. Netflix has a strong chart in the sense that today they came back, consolidated right smack dab on the T line and came back up. Stochastic's heading up. Where's the logical target? Up here at the 200. See if they can break out through that level. Amazon, a different chart in the sense that they've started gapping this up at a nice little scoop type pattern. And now we're back in the steady eddy. It's kind of this uptrend. The options room, I keep pointing this out so that this is something you can do some clever option spreads. Anticipating you're in a steady eddy during a time frame, you just figure out which bullish spread is the most effective. And then things like Cuervo, close this one out today because what should it have been doing if it was heading back up? Obviously, after a doji, it should have been opening positive and trading positive. The fact that it opened and started trading down told us immediately this little downtrending channel is still in progress, number one. And number two, there's no buying strength here. It should have been moving up further, and there was nothing there to tell us the bulls are there, close out the position, and go on to something else. That doesn't necessarily mean it's over. This means right now it's not a bad place or a good place to have your money. Wait for the next buy signal. Same thing with Western Digital. Now some of the other ones, this one's a good looking chart. IRM, ever since the little scoop type pattern. You just stay long on this until you see a sell signal. Things like AMD. Now this is, I am doing up another stop loss session here as soon as I can get it put together. But there's reasons why you get back out of a trade. First of all, ADM looked like it had a good uptrending chart. But right now, it's not telling you there's any buying going on here. So the probabilities are you might be in a sideways wedge at this point. And if you can analyze something and say, well, there's really no direction to it, take the money, close it out. If you've got a loss, it's better to take the loss and go on to something that you have a much greater probability of getting those losses back than sitting in something, waiting to see what type of pattern it's going to develop. So this one should have been closed out today. Let's see, we did the golds. Oh, we recommended IOC because anytime you see that gap up through a resistance level like we saw on this best friend, you want to be buying. If this is wave one, which was approximately 12 points, look for this to get up into about the $54, $55 area. We also recommended FSM today, and on the same basis. On Friday, did a doji sandwich breakout, which essentially tells us here we had wave one, wave two, and where did wave three start? Kind of a little gap up off the T line, going into wave three, breaking out into this territory. And Weibo's doing a nice fry pan bottom. This one I would not be afraid to be purchasing on positive trading tomorrow for a couple reasons. Because if it opens positive, we know there's a high probability of probably having at least another wave like this. number one. And number two, usually on a fry pan bottom, if this market just kind of goes to heck in a handbasket, it usually takes a little few extra days for a fry pan bottom to start showing weakness. So it gives you a little bit more time to close out the position without getting really blasted on it. We did buy calls on MDV N, wave one, wave two. Notice all the factors of why this one could be bought. Where do most people sell? They panic sell at the bottom. The Stochastic's in the oversold area and they gap it down a little bit. Then they did a morning star signal. Then they gapped it up through this resistance level as well as the T-line. Doing a scoop pattern. And I guess this is a buyout situation where Nora in the options room said that might be raising the price on the buyout of this one. So not buying it or selling it based on a buyout, buying it and selling it based upon what investor sentiment's telling us to do. Kind of the same scenario on NSP, little scoop type pattern, keeping you up above the T-line. RGS also can be built on positive trading. Definitely want to see it get through this level. Again, you got the little scoop pattern. A lot of different companies looking at it, Lori. All right, thank you. Jim, no. We're buying the pattern, not where the stock is. Remember, if a stock hits a 52-week high, because it might keep going in and out, if the a pattern or a price is hitting a 52-week high, it may keep right on going. So we're not buying it based on where it is. We're buying it based on what's the pattern that it's in or got it there. There's lots of stocks I buy at the highs because they've done a nice pattern to break out into new territory. EXK was mentioned a few times today. Again, notice where it's trading right now. Right smack dab at the high. So if this breaks out, that means it's got a lot of running room. Based on this fry pan bottom, there's kind of your dimple. There's your halfway point from here to here. Same distance from here to here. That puts you right in the mode of timing that this is the time to be buying on the breakout. And EBIO, you can start looking at this one. That's nice bullish engulfing. And where did it happen? Right smack dab off the 200-day support. Wouldn't be afraid to be buying this one on positive trading tomorrow. And, all right, whose handwriting is this? Nuva, same scenario. You're right at the breakout point. Where's the next target? Kind of getting up in this trajectory. And oops, I had a few more here. LCM. Same scenario, and look where it is now. So this is where you put all the factors you can into your analysis, which is, one, you've got a doji right here on the 200-day moving average at a resistance level. Two, it's right at the same level of this little fry pan bottom J-hook started. So three, it makes it very simple. If it opens positive tomorrow, you buy on positive trading immediately because you're going to have a doji sandwich breakout with a high probability that your next move is going to be of that same magnitude. Oh, GL. EIO. This one we've been watching. Nice rounding bottom. I'd still be a buyer of this one on positive trading, also from the J-hook pattern setup. TDOC, we're still in. Haven't seen a sell signal, but pretty much consolidating. Notice how far away it got from the T-line, and it really hasn't created a sell signal. So want to hold on to this and just use the T-line as your stop. Joe, I wouldn't go after it until it broke out. If I was going to buy right now, I'd buy if it came up through these highs. That would tell you that they've consolidated and now they're heading in the right direction. These are the type of stocks that you like to find in the 45 degrees that stay up above the T-line. And some of the oils you look at, and if they break the 50, like on ECA, you close it out, but you get ready to buy it back on the next buy signal. And ERF, I think, was kind of the same scenario. There's going to be times when the chart looks great, and then all of a sudden the chart goes bad, close it out, and then get ready to buy it back on the next time that you can see that the bulls have taken control. All right, let's see. I'll do CLF. Hold on to your individuals until CLF looks like it's kind of failed up here. If it opens lower, I'd close out the position. And then I'd just put a buy stop above Friday's high, that if it comes up through there, your J-hook pattern's still in progress. But notice what type of setup you've got right now. This is what we call a double doji, which means if it opens positive tomorrow, you want to be buying immediately because the consolidation would be over. Okay, thank goodness I didn't have a whole lot tonight. We're even getting started that late. The problem is right now, we're probably in a consolidation stage until we see whether it's going to hold the 50 on the Dow and then come back up. This is where, if it breaks back up through this level in the next couple of days, that's where you want to start buying aggressively. Okay, let's see. With that, before we tell Jim to do the double line, we've still got 2 seats available. We've got a couple people thinking about them. But there's still 2 seats available for Keuka Lake private training. To be from August 9th to August 12th. And you don't have to bring anything other than your bathing suit and your flip-flops. You don't have to take notes because everything that we look at will be available and anything on the website will be available. Would you hold off all new money to see? Yeah, I wouldn't be committing any money right now, long or short, until we see if this is just the first consolidation once we came back up to the resistance level. How do you, the stochastics, how do you the, yes. Again, the top priority is what are the signals telling you? And then where are they telling you as far as the stochastics are concerned? So I wouldn't think this is a full-scale reversal because we haven't really gotten up into the overbought area. What I would suspect, though, is they're going to come back down and test the 50. The reason for that is, notice that when it bounced off the 200, it did it without a reversal signal, just a reversal or an up day. So that usually means when you hit a resistance level, you watch to see if there's going to be a pullback. And then if there's a pullback, then that's when you start looking for a buy signal, like a hammer signal, a doji, or something off the support level. How do you use stochastics? Stochastics are basically telling us the probabilities, just kind of common sense. The Japanese race traders say that a candlestick buy signal doesn't mean very much unless it's in the oversold area. Obviously, a candlestick buy signal in the overbought area isn't. It's just kind of another bullish day. On the other hand, a candlestick sell signal in the oversold area doesn't mean all that much. We're looking for the candlestick sell signal in the overbought area. We're looking for the candlestick buy signal in the oversold area. Yeah, with earnings starting up, earnings really don't usually bother me at all, because usually the stock is going to do or kind of indicate what everybody's expecting the results of the earnings to be. And most of the time, they're correct. Okay, I'm sorry we got started so late. I just bought or upgraded my Dragon Naturally Speaking not too long ago, which I hate to do because I know there's always bugs in the new software. Sure enough, if I don't turn on my Dragon Naturally Speaking first, if I put it on or bring it up later, it closes out all my Internet Explorer sites. Then I have to shut down the whole system and start again. So I guess with that, again, I'm trying to keep the last two seats open for members. When overall markets is in the red, how is the best way to trade? Overall markets in the red. I mean, if it's heading down, you can look for just as many sell signals, or I mean, you can find sell signals just as easy as you can find buy signals. But right now, with us pushing on this this resistance level, with stochastics coming up, I still will stay long. Plus, when the overall markets are moving in a direction, that doesn't necessarily mean all the markets are going to go south. For example, a lot of times when the market's heading down, gold goes up. And so you can be trading the gold, or might be crude oil is heading up or down, depending on which way the market's going. It could be the opposite direction. So the advantage we have with the simple scans of candlesticks is at any point in time, no matter which way the market's going, we can find out which direction or which sector is strongest in both the bullish and bearish direction. So there's always something going to be able to be traded. Out of 10,000 entities that can be traded out there, we're always going to find 5, 6, 7, 8 that are, which we don't need too many more of. So anyway, with that, Jim, go ahead and do the double line. And in 4.2 seconds, let's do the next double line. NVDA. This one I'd be ready to buy. It's got a little bullish engulfing. I'd buy this one in positive trading. Just watch, see if it can get up through that level. Oops. Scrolling slow, and everybody still scrolled right past me. PGNX. This one you have to watch. You can see where it failed today, right at the 50. Supported right on the T-line. I'd still be a buyer on positive trading, but then the next time it gets to the 50, you got to watch pretty close to see whether they can get it through. Another of the gold stocks, I wouldn't be afraid to be buying this one on the big fry pan bottom. That's GN or GGN. INSEE opened up strong. These are the type, when they gap up that much, If it comes back down through the open, I take profits because what I can do is wait to see if it comes back up through the open. So at this point, it's still kind of doing the message, but you have to wait to see when all the profit taking is over. And Yard, another one that can be bought after breaking this little downward trend channel. If you're buying this one, again, obviously watch to see what it does up here at this level. Southwest, stay long as it stays above the T line. Yahoo doesn't have too much of a direction. If I was trading Yahoo at this point, if it opens lower, I'd be out of it because it tells you it's still stuck in the sideways. If I was going to buy it, I'd put a buy stop up here at wherever this is, 38.40, knowing that it broke out to the upside. FTR, another one that you can stay long, but it's not very exciting. You can see how the congestion is in this downtrending channel. So the 50 is your target, so you got to decide whether that's a big enough price move to make it worthwhile or not. CNX, another one that has to open positive to stay in it. If it opens lower tomorrow, they failed up here and they're still in this sideways channel. Tesla's getting tough to trade. If you're long, you stay long. But you definitely need to see it open positive tomorrow. Well, not really. Just as long as it stays above the T line, you're all right. But it's not in a good trading mode at this point. ADMP, that's a good looking little chart. Doesn't have a lot of volume, but you can trade this with your smaller positions. I think it didn't trade a whole heck of a lot, but a decent amount. MNOV, stay long. I would use Friday's open as my stop. It shouldn't come back down through that level. Mobley, this one I would have probably stopped out when it came back down through this low. It's still strong, so if I'd stopped out right there with the anticipation they're going to come back and test the T line, if I'd stopped out, I can always put my buy stop above today's open. If it comes up through there, the profit taking's over. Jason, no, I always sneeze. Boeing wouldn't be long or short. There's nothing there on that chart to sink your teeth into. Facebook's kind of the same scenario. Facebook just is not a good trading stock, direction-wise or face-wise, or face-wise, percentage-wise. Labu still trying to get back up above the 50, which also tells you, again, with a doji sitting right here, that if they open it lower, you're in a bobble. They need to open it positive and trade positive to, no. Would not continue to buy. Because there was your breakout right in here. Now you just hold until you see a sell signal. At this point, if I was long, I'd have my sell stop as a safety at today's open. It shouldn't come back down through that level. PGNX, we did that one. Needs to open positive to stay in it. USB, right now you could be ready to go short on this one on a bearish J-hook pattern. you can see where it broke out on the bullish engulfing J-hook pattern right here at the breakout. Another one that if you're long, put your stop right now at the previous day's open. It shouldn't come back down through that level. And the reason you do that is because you are up in the overbought condition. AVXL, all you can do on this one is stay long. Same scenario. You're in the overbought area. I would probably use today's open as my stop, waiting for the T-line to catch up for that to be the stop. Whiting, not a good-looking chart right now. Not until they can get it back up above the T-line. And that's still probably going to be a function of as long as crude oil continues to hover in the $48 to $50 range, telling you that it's not going down further. The oils still need to get their feet underneath them. HL, you stay long, but I would use today's low as my ultimate stop. If it opened lower tomorrow, I might take off half the position. But I wouldn't want to see it trade at all back below today's low. That hanging man would then be confirmed. And VDSI, you can be shorting this one, yes. Harmony, you can be buying this one. The gap up through the resistance level. And you're now pushing on this level right here. Wave 1, wave 2, get ready for wave 3. Okay, let's see. MGT, you can be buying this one on positive trading. You can see the J-hook pattern in progress. Sir, all you can do is stay long as it stays above the T-line. GLF, nothing here. Shouldn't be in this one at all. You can't be short unless you shorted it from above $5. But I wouldn't be doing anything with this one right now. Oops. FIVN. Whoops, I may have goofed that last one up. This one, if you're long, has to open positive tomorrow. And let me go to GLF again to make sure I had all of them on there. Yes, still wouldn't be doing anything with this one. This one needed to open positive today. Prudential. You can short this one on the bearish J-hook. And Uri. Same scenario. You can be shorting this one on weakness. Now remember, got to watch to see what the market is doing in general before jumping into some of these shorts. SXCP, you can be buying this one on positive trading, breaking out into new territory. AGN, stay long on this one, as long as it stays above the T-line. And TRQ, this one you get ready to buy if it opens positive tomorrow on a doji sandwich breakout. And PCG, starting wave 3, stay with this one. RTRX, another one that's still kind of in a sideways mode. I'd be more apt to pay $19.60 for it, knowing that it broke out to the upside. But right now, as you can see, it's still in a wave 2 sideways. STX, we should have been out of this one today because It's in wave 2. It had an opportunity to break out into wave 3, which it didn't do, and it closed below the T-line. More than likely, it's coming back to the 50. Right now, I wouldn't be short, but I definitely would not be long in this one at this point. SGY did some backing and filling today. But one very simple rule of a fry pan bottom. You stay long as it doesn't close below the T-line. Silver, just stay long. ADRO, another one that you want to see it open positive tomorrow. That would give you better indication that they brought it back to the 50 to see if it's going to act as support. And Wisdom Tree. Right now you can, if you're short, you stay short on this one. There's the little evening star failing right here at the T-line area. Lamel, just stay long. Use the T-line as your stop. RPTP, another one you could be buying on positive trading tomorrow. If you're long, you just use the T-line again as your stop. Flexion, you could be buying this one with the anticipation it's going to come back up here and test this level. MasterCard, stay short. Make this smaller. Yeah, nothing there. I'd stay short on this one. ARGS, this one I would have closed out today with it opening at the previous day's open and then finishing up lower. Not a good chart. I'd be someplace else. You can always buy it back if it does another strong buy signal. But right now, it's not telling you anything. Cypress, you can stay long, anticipating a 45-degree. Another one where you just use the T-line as your stop. CNX needs to open positive tomorrow to stay in it. Zynga. You stay long on this one. Obviously, watch to see what it does at this level. If it breaks out, it's coming up here into this level. Is there a reversal signal there? I don't see one. What would you think the reversal signal would be? IOL, nothing happening. IOC, you stay long. US Steel, also, if it opens lower, you close it out. Tells you you're in a sideways mode until they can break out. And PAS should be acting well. It is. I would just stay long on this one. I would use the low of yesterday, well, probably even the low of today as a stop. It shouldn't come back down through that level. And NetTease had a good-looking chart. You could be buying this one on positive trading, anticipating a 45-degree. Option-wise, which one, JM? Right now, I'm still buying the July. There's 3 weeks to go in July. And in the next week, we'll probably start looking at some spreads based upon the market not really falling out of bed levels. Okay, I guess that's about all we got tonight. Anticipating you have another day or so of consolidation, maybe even by the end of tomorrow it'll start coming back up. But this is the area to watch. What else? So gold, you still want to have some of your positions in gold still acting very well, which means things like Nugget or JNUG still going to be good, strong option trades. Whoops, there was more. I didn't scroll down. Okay, 3 more. SGY, you just stay long as it stays above the T line. ACIA, not a great chart, but obviously in an uptrend, so you can stay with it as long as it's above the T line. And Zebra, yeah, stay short. Observe the obvious. Got up to the 50, did a kicker signal to the downside. It's in a downtrend, making probably parallel line right down through here, heading down probably to the $42 area. On the financials, Goldman, with Goldman in a sagging direction, that means the market's not going to be going anywhere with any great resiliency. And JP Morgan still heading down, so that's not anything that's telling us that there's any great resiliency coming into the markets. MetLife, another one that you can be shorting on weakness tomorrow with the doji gap down from the T line. And last two, Suns. If you're long, it has to open positive and trade positive to stay in it tomorrow. CBAY. CBAY, nothing. I wouldn't be long or short this one. That's a nothing stock. Okay, Paul, Captain Compassion, email me, Steve@Candlestick Forum, with your phone number, and I'll get on the phone with you, give you some details. WFC, another one you can stay short. All right, everybody, have a good evening. We'll see everybody bright and early in the morning. We'll see you then.